you are likely to see some bit of a positive reaction in terms of Kotak in today's session. And this is mainly on the way the brokerages are looking at the company. Overall, if you go to see nearly 10 months after the embargo was imposed, the bank now once again will issue new credit cards. And if you see UBS, they have maintained a neutral. They have a target price of 2,100. What they are indicating is that the loan and the fee growth will be supported from here on. Kotak had actually lost almost 130 basis points in terms of market share in the credit card outstanding during the 9-month FY25 period. This will also go in and enhance the flexibility in acquiring new deposit customers. Apart from that, you have a Macquarie, which has gone ahead and maintained and outperformed. They have a target price of 2,200. They are saying that this is going to be a welcome relief. The withdrawal of the ban will provide improvement in terms of growth for Kotak and will provide cushion with regards to where their margins go. And they maintain and outperform given the valuations. That is going to be interesting to watch out for. They're expecting a strong earnings growth in FY26 and the RBI lifting ban on Kotak in 10 months versus 15 plus months that was seen with largest private sector bank, right? So the timeline has come in much earlier. So I think that is something that the street was not expecting. That will be a positive. Apart from that, you have two other notes as well that have come in. I think you have a Morgan Stanley as well as HSBC. HSBC also has a buy rating and they have a target price, in fact, increased to 2,210 from a 2,100 on this counter. So interestingly, Neeraj and Alex, if you go to see Kotak, I mean, that was on the sidelines. Now, the key is going to be how much are people willing to come in and look at a Kotak. Is there buying that is going to come in terms of Kotak and the kind of impact it will have on the overall market sentiment as well?
If I remember correctly, post the results, it had quite a bit of a spurt. There was buying that came through.
Yeah, but if you in fact, instead of trying to second guess, if you just pull up the 5-year chart of Kotak, right? Just pull up that chart and you will see the stock has virtually gone nowhere. I mean, if you just look at the slightly longer term dated chart for Kotak Bank.
Yeah, some 15-16%, I think 5 years returns is what Kotak has seen.
And after that initial spurt that came in the first half of 2020, the stock is virtually at the same level, 1900. It's not gone anywhere. So does this help it? Let's wait and watch.
Yeah, the statement that the historical price to book it's significantly higher than what it is right now. So that's a strong argument to make based on the time correction that it's.
Yeah, it's not grown as well, to be fair.
Yeah,
but,
that's fair.
So that's also the reason. But yeah, this is a big spurt. So certainly risk reward in favor.
It is on reward. It's on your list. It's on my watch list. And I think a technical analyst will be the best to answer this today, whether we will see that uptick that could come in. Is there buying interest from here on, and whether the charts are strong or not? But the second one on my list, apart from a Kotak, is a ICICI Bank. This is going to be interesting because their JV partner, which is Prudential PLC, has planned the listing of its AMC unit. And what ICICI Bank has gone ahead and said is that they will be retaining majority stake in ICICI Prudential AMC. So yes, ICICI Bank, that's a thumbs up from our side. And you have a Nuvama on a Muthoot Finance as well. So Muthoot Finance, that's going to be another one that we'll be watching out for. There has been an upgrade to a buy. They've hiked the target price to 2,550. And the reason why they've done this is because overall, they are very positive in terms of the third quarter numbers that have come in, and they're calling it a turnaround and a solid quarter. And they're expecting strong AUM growth going ahead. And the net interest margins are expected to remain stable as per Nuvama on a Muthoot Finance. So these three stocks, Alex, on my radar.
Okay. I've picked 3 positive results and they look quite good actually. We've been speaking about a few CDMO players that have been reporting decent numbers, and Suven has reported a strong set as well. The revenue growth is as much as 40% in the quarter gone by. There is an increase or uptick of as much as 78% in the EBITDA. The margins have expanded quite substantially. That is where it's coming from. The margins have come in at 38.3%, and that compares with 30.1% in the comparable quarter. And you have the net profit as a result of which that has risen as much as 77%. A very strong set of numbers from this player. The second one is Premier Explosives, and this is a counter. Of course, it's a company that is guided for a very substantial increase in turnover in 2025. The guidance is that it is, or the plan is that it plans to achieve a turnover of 5,500 crore of turnover by 2025. The quarterly revenue in the third quarter stood at 166 crore rupees. That is a tripling versus the comparable quarter. The margin has actually contracted. It's come in at 9.3% compared with 11%. But the net profit on account of that sharp increase in the turnover or in the top line has risen as much as 5 times to 9.2 crore. This is something that you should keep on your radar. And finally, simply because it's a return to the black and an improvement in performance and a performance that is better than expected, I'm talking about Honasa Consumer. The revenue is up only about 6%. It was more or less in line with expectations, which had pegged it at 515 crore rupees. The beat has taken place on the margin front as well as on the PAT front. So you have the profitability that is improved. The margins have contracted, but they're actually higher than expected at 5%. The expectations had pegged it at 3.7% or thereabouts. And the net profit has come in flat at 26 crore rupees compared with an expectation of 17 crore rupees. This is a stock that got beaten down after it posted a loss in the previous quarter, and so you could expect some buying coming through for investors that have held faith with this company.
Yeah, unfortunately for them, because the stock has really gotten hammered out of shape. So, Honasa is certainly not top of anybody's, has not been on the top of anybody's buying list. The results may be a whiff of positivity. Yes, indeed. Now, I don't know if I'm stealing the thunder from what Varsha is going to say, but here are my 3 stocks. The first one on my list is Godrej Industries. I want to point that out because the numbers look strong, very, very good. Revenue is up 34% at 4,824 crores versus 3,590 crores. Margins at 12.4 versus 7.8. Very good margin performance, as a result of which the net profit up 77% at 188 crores versus 106 crores. So that is very, very good performance from Godrej Industries. So
and to add to that, if you see the stock price, the last 1 month, 15 to 16% is the kind of downtake, right? So the jump that probably could be coming in today's session is going to be fantastic.
Yeah, very likely. So good performance for a stock which is largely not gone anywhere. So keep an eye out for this one for sure. I wanted to take 2 healthcare names, but I'll take them if Varsha is not going to take them. So the second stock on my list, I'm swapping it and bringing in Bharat Forge into the picture. Bharat Forge revenues were down 10% at 3,475 crores. The estimates were 3,770 crores. EBITDA margins almost in line. I mean, 17.95 versus 18.2. You would argue that is in line with estimates, really. But the net profit left a bit to be desired. 213 crores, the estimated 303 crores. BOFA has maintained the underperform. They've cut the target price. But there are a couple of things that might be interesting for Bharat Forge. One, it is partnered with Liebherr to set up manufacturing unit to address global aerospace industry demand. So this could be interesting. And there are hints of restructuring happening at overseas units, which might actually help Bharat Forge's sentiment. So keep an eye out what commentary Amit Kalyani gives us today. At 9:40, he'll be with us. I think it'll be very interesting to understand from him what he thinks about these. So watch out for Bharat Forge as the second one. And watch out for SBI Cards. Now, it's done reasonably well in the last few days, weeks. Some people believe it's the best way to play the rate cut cycle. Macquarie's come out with a note. They've upgraded the stock to an outperform from a neutral rating. They've raised the target price to 1,000 rupees. They've raised the target multiple as well to 3.4 times from 4.8, from 3.8 times to 3.4 times to 4.8 times. They say channel checks indicate credit card slippages are plateauing, and they expect credit costs to start declining materially in the next 2 quarters. In fact, I think Morgan Stanley also has a note on SBI Cards today with almost similar rationale. So do watch out. This one could have a decent day today.